In a changing global economy, trade finance in Africa is facing both exciting opportunities and persistent challenges. From cross-border payment delays to the cautious return of capital into African tech ecosystems, experts unpack what lies ahead for the continent's financial future at Event Hive's UK Africa Business Outlook, held in London in partnership with Adilshaw Goddard.
We're seeing in the continent, to start with, cross-border payments take a lot of time to settle. We've had clients who have 2 weeks of settlement time. But not only that, it's the uncertainty around when the payments are received, which that damages your and then finally, there's a compliance piece. A lot of banks still see at least some of the African countries as a high-risk jurisdiction, which again creates friction when we want to do same-day settlement for a lot of our corridors. There's price transparency. I think you can try to make it quite transparent to clients how much you're.
In my opinion, KYC DD, due diligence done by banks, is a mechanism to actually narrow down the client base of banks. They are shedding clients like there is no. Yes, there is a regulatory requirement to do the KYC DD, but then it only takes you 6 hours at most to open up a revenue account. It takes you 6 months or 9 months to open up a bank account with a particular bank. So I think one has to be very careful as to what the motives are of banks in terms of the onboarding exercises. And what that means is banks are very fragmented. So banks will now say, I'm only interested in doing this sector in these geographies, irrespective of the risk. The export credit agencies, going back to some of the points made earlier, they're actively competing against each other. I looked up yesterday UKEF's website in terms of their appetite for the African countries. They've got 52 billion sterling of appetite. They have only 52 billion of sterling appetite. There's 25 countries they will say, come to us, which means if you've got a good project, we will do support this, a good project in a difficult market. And they're only off cover for 6 African countries. That's UKEF. There are 40 different export credit agencies.
Despite these barriers, experts insist that liquidity isn't the issue, as viable African projects are often oversubscribed by international banks. The real problem? Selective banking and rigid risk perception.
We do a lot of the pre-feasibility, bankability studies and working with the clients to get the projects ready. When we go to the banks and we tender them out to the banks, irrespective of how difficult the market, how big the transaction, they're typically 5 or 6 times oversubscribed. So there is, in our opinion, there is no shortage of liquidity for projects which are bankable. In fact, the banks can make money if they lend. What do we need to do to make this project happen? But notwithstanding that, it's still difficult to get projects done in Africa. So I think you have to look at those projects which are hard currency revenue generating projects, oil and gas, minerals. They're relatively easy to do. The dollar in, dollar out. The challenge, I think, is the social infrastructure, the hospitals, the water, the housing, the education, kind of agri, where you don't have hard currency revenue. But at the moment, a lot of the debt is in hard currency, so you're creating this FX risk that really shouldn't be there in the first instance. In Tanzanian shillings for 10, I disagree. It's there. The challenge, I think, is that the banks with the knowledge and sophistication to package these transactions together are here. The funding in local currency is there. And the majority of the banks that do project finance, whether it's PFI, PPP, VCA financing, most of them are in the commercial banking world, where their KPI as bankers It's about annuity.
Concerns around warehouse receipt financing are also raised, as what was once key to Africa's commodity trade is fading fast. Fraud, poor insurance, and messy legal battles are pushing banks away, while traders are now struggling to access working capital. Experts say this silent collapse is fueling inflation.
Very prevalent and required in Africa is warehouse receipt financing. It's extremely difficult. The insurance is not available. All the collateral managers everybody's got a court case against them. Everybody has got an issue with insurance. So commodity insurance is a major problem. And that is why it's very difficult for alternative financiers. That is the reason why I sold AMC Trade Finance. I saw that it became impossible. But that is what is driving cocoa, coffee, cashew, iron ore, copper, everything that's lying in a heap in a warehouse at a port in Africa, all across Africa. The trader, the farmer, the cooperative, whoever is trying to use that collateral as trade, requires this type of financing, and it's just running up. There's just no more support for it.
I would say the role of International Chamber of Commerce is, I would say, on one hand, doing the advocacy, lobbying with the international institutions. On one side, on the European side, making them aware about the challenges, but also I would say partner more with the Africa Development Bank and other institutions, within Africa, and also creating awareness on both sides, and this is where these business forums, as I mentioned before, come in as a key player. It's high time that we change the narrative of a lot of African countries. So we, of course, as our chamber, we believe highly in this market, and that's what we're also doing. We are doing the advocacy. We are, promoting the opportunities in Nigeria, and we are happy that we have the big players on board from Nigeria. We have the Lagos Free Zone.
Stakeholders here say the African tech boom is shifting as investors are trading hype for hard metrics and demanding real results.
There's something that's become apparent in Africa, and this is not to immediate cycles, but we have good times and bad times. And what we're seeing in bad times, it's been a bloodbath for a number of African companies. They've not been able to survive. So one of the most important things for us is we're looking at things from a sustainable point of view. That if this company does not continuously raise money, can they defend their position? We're looking at things like operational efficiency, unit costs, economics, in terms of how companies spend, right? And before it was, like I said, expanded our costs. We're looking at not necessarily tightening things to destroy innovation, right? When we're looking at founders, we're looking for founders that, apart from understanding the domain in which they want to build, but they have a deep feel and understanding of Africa, because it's fundamentally different from the rest of the world.
With foreign venture capital drying up, calls for local currency funding are growing. Recent IPO wins in Nigeria and Morocco show public markets can deliver, but the expert position is valuation needs to reflect true local performance.
So to get from 200 billion to 25 billion, that takes a bit of a leap of faith when you've got a falling capital base. So we've got to be thinking about different sources of capital. Actually, the public markets, it is a viable thing. And there's a public market for everyone. There's a local market. So start on the NGX, start on the NSC, start on Uganda Stock Exchange. Focus on different things, focus on the customer base. Well, the problem is you've got a lot of funds that are US dollar funded, investing in companies that make money in local currency. So despite the businesses performing fantastically, they may grow 30, 40, 50%. If you have a 75% deval in Nigeria, that wipes out gains in dollar terms very, very quickly. So I think that it's much more important to start seeking local sources of capital. Unfortunately, a lot of the tech infrastructure is only payable in dollars.
With the ongoing shift in global dynamics, trade and tech in Africa are evolving, and so are the rules of the game. For businesses and investors alike, the key is resilience, clarity, and a deep understanding of the African market. Ibukun Bankole, Tech Pression TV.